for the financial year 2024-2025, 2026-2027 present more taxation for Kenyans. In the document prepared by the National Treasury, government could end up taxing services provided by schools that are not directly related to education, such as swimming, to reduce inequality. George Maringa paints a picture for this.
The government is in the process of formulating the budget through the medium-term plan after public participation was held last month. The proposals have now been forwarded to legislators for further deliberations that will inform the implementation of the budget of the years 2024-2025 through to 2026-2027. Among the highlights are Section 38, which states that residential rental income within a threshold of 288,000 shillings to 15 million shillings is currently taxed under a simplified regime at a rate of 7.5% of the gross, with an option of payment at the corporate rate. Government will review taxation of residential rental income and implement either or both of the following options. 1. Tax the residential rental income at the corporate rate and allow for expenses, or retain the simplified tax regime but progressively increase the rate and allow deduction of at least 40% of the revenue as expenses. This could see rent go higher. The government also intends to introduce VAT on educational services. According to the government, some schools provide some services that are not directly related to education. The exemption from VAT on education that include all services provided by schools create unfairness, as some services like swimming, when offered out of school, are VATable. To remove this discrimination, there is need to impose VAT on the additional benefits. In this respect, the government will explore the introduction of VAT on services provided by schools but are not directly related to education. The government also proposes to introduce VAT on insurance services. Currently, all insurance services are exempt from VAT. Taxation of insurance services at the general rate will expand the tax basis and hence raise VAT revenue as a percentage of GDP. Therefore, the government will introduce VAT on insurance services. Other tax measures include carbon tax and green fiscal incentives. During the strategy period, the government will explore the possibility of introducing a carbon tax based on the carbon content of fossil fuels. The government will review the tax incentives that promote use of green energy. The proposals have elicited mixed reactions online, with Kenyans already feeling the effects of the Finance Act 2023, which introduced 1.5% housing tax.
However, it is important that as we talk about those tax revenue, those tax increasing measures or tax or revenue enhancement measures, it is important for us to be very clear to our bosses who are the Kenyan people that yes, we need increased revenue. What and why do we need this increased or enhanced revenues for?
These proposals are among the preliminary stages of the budget-making process, which will continue and gain momentum towards April of next year. George Maringa, TV47, Nairobi.
Thank you, George Maringa, for that. And actually, speaking about matters gaining momentum, to matters politics now, the National Dialogue